This podcast is brought to you by Empor.top, the stories of top companies. Disclaimer: this AI-generated content is for informational purposes only and should not be considered as investment advice. If you like our podcasts, please subscribe on Apple Podcasts, Spotify, or your favorite podcast player. And don't forget to follow us on X at Empor.top. Find thousands of stories of top companies on our website, Empor.top. Corebridge Financial, the $20 billion spin-off that saved retirement. On September 15, 2008, the world watched Lehman Brothers die. But the real terror, the moment that made Hank Paulson's hands shake and Ben Bernanke lose sleep, was not Lehman. It was what almost happened the next day. American International Group, the largest insurance company on the planet, was hours from a collapse that would have made Lehman look like a regional bank failure. AIG's tentacles reached into every corner of the global financial system. Pension funds in Norway, municipal bonds in Kansas, life insurance policies in every zip code in America. When the Federal Reserve engineered its $182 billion rescue, the largest government bailout of a private company in history, the public narrative hardened into something simple. AIG was the villain, reckless, greedy. The company that sold credit default swaps on subprime mortgages until the whole house of cards came crashing down. That narrative was true, but it was also incomplete. Because buried deep inside AIG's labyrinthine corporate structure, underneath the financial products division that nearly destroyed the world economy, past the layers of offshore entities and leveraged bets, sat a business that was doing something remarkably boring and remarkably important. It was collecting premiums from school teachers in Texas. It was managing retirement accounts for hospital workers in Ohio. It was writing life insurance policies for families who just wanted to know their kids would be okay. This business did not blow up. It did not need a bailout. In fact, it was the reason the bailout worked at all. The collateral the Fed pointed to when it justified lending hundreds of billions of dollars to a company the public wanted to see buried. That business, AIG's Life and Retirement Division, would spend the next 14 years trapped inside a corporate structure that no longer made sense, weighed down by a brand name that had become synonymous with financial catastrophe. Activist investors screamed for its liberation. 3 successive CEOs debated the merits of setting it free. And when it finally emerged in September 2022, reborn as Corebridge Financial, ticker CRBG, in the largest American IPO of that year, it arrived into a market that was itself in crisis, with interest rates spiking and equity valuations cratering. The story of Corebridge Financial is not a startup story. There is no garage, no pivot, no Series A. It is something rarer and, in many ways, more interesting. The story of a 100-year-old business that was hidden in plain sight, misunderstood by the market, undervalued by its parent, and finally given the chance to stand on its own. It is the story of how the good bank, inside the bad bank, became a $20 billion independent company managing nearly $400 billion in assets, and why in an era when 11,000 Americans turn 65 every single day, the boring business of retirement might be the most important growth story nobody is talking about. 3 themes run through every chapter of what follows. The first is the great deconglomeration. The trend sweeping American finance as sprawling conglomerates realize that their parts are worth more than the whole. General Electric did it, United Technologies did it, and AIG, after a decade of resistance, finally did it too. The second theme is the yield trade, the race among insurers and asset managers to squeeze higher returns out of insurance investment portfolios by moving from plain vanilla bonds into private credit and alternative assets. A race that brought Blackstone to Corebridge's door with a $2.2 billion check. The third theme is demographic destiny, the massive retirement wave called Peak 65, where more than 4 million Americans cross the retirement threshold each year from 2024 through 2027, creating a demand surge for guaranteed income products that the industry has never seen before. Each of these themes converges on Corebridge Financial like 3 rivers meeting at a delta. Whether that delta produces fertile ground or a flood zone depends on how well a century-old insurer, freshly stripped of its too-big-to-fail parent, can reinvent itself in an age when private equity juggernauts like Apollo's Athene and KKR's Global Atlantic are rewriting the rules of the insurance business. To understand where Corebridge is going, we need to start at the beginning. Not in the wreckage of 2008, but in Houston, Texas in 1926, when a group of oilmen and dealmakers launched a small insurance company called American General. This podcast is brought to you by Empor.top, the stories of top companies. Disclaimer: this AI-generated content is for informational purposes only and should not be considered as investment advice. If you like our podcast, please subscribe on Apple Podcasts, Spotify, or your favorite podcast player, and don't forget to follow us on X at Empor.top. Find thousands of stories of top companies on our website, Empor.top.